right, I want to go over a quick video. I had people asking me questions of how I use Fibonacci. I'm going to go over a quick video, simple breakdown of how I use it and how I'm able to implement it on a day-to-day basis. First of all, we got to get the Fibonacci tool up here, Fibonacci Retracement. I'll make another video later, more in depth of what Fibonacci actually is and how it's used around the world, what we find it on. Just a quick video on how I use it. We'll get in more depth with it later. For one, we have a low, high, and then the retracement levels. We have retracement levels 50%, 38.2, 61.8 are the levels that I look for. Deeper retracements will go down to 78.6 or 88.6. A lot of times there you start to get like double bottom structures. It'll be something like this, something like this. It'll look more like this, more like it's in a consolidation, right? When you get those deep retracements. I'll show you how I was able to use it earlier this week to get a good trade, and it was literally I had a wick entry on this 50%. Took these longs up from this fib level. So going back to how I use it, set it up from point A to point B of your swing. Point A, point B, we start looking for rejection at these levels. You want to start looking for rejections or slowdown at these levels. So we have the market came down. We had a high, came down to retrace. So think of the market almost like a rubber band, right? When you pull a rubber band, the harder you pull it, the harder it's going to snap back at you, right? So if you have these light pulls like this, right, you start to get these aggressive snaps up. Now if you get these pulls like this had a pullback all the way back down here. Look how aggressively it shot up. A lot of times when markets in consolidation, you'll start to get those big snapbacks like that, right? So we can have another fib here, point A, point B. You want to use it on your market structure. Look, 61.8, they call that the golden level. 61.8 is a level that is sought after for Fibonacci, people who use Fibonacci, right? So you have the market starting to slow down at the 61.8. Bearish engulfing candle, you could take an entry right here, ride it down to the negative 27. Look at that, hit that to the T. All right, you could go back test this on your charts, and you're going to continuously find these levels that the market rejects and shoots up. So for example, you get these wick entries. You could put limit orders on these Fibonacci levels, right? It's how I usually use it. Shot up negative 27, even went up to the negative 61.8. These are Fibonacci extensions, right? So once you get these pullbacks, you have these levels that the market usually ends up hitting. I'll do another example outside the charts with just like a line chart. So if we erase this fib, what do we have here? If you look like this, right? Market's going up. This isn't an aggressive pull. We have a pull up here and then continuation, right? We have a impulse, correction, continuation. So if we put a Fibonacci point A to point B, let me highlight it to show you. We have this low. Remember, we hit that 50% and shot up. So now we have we're going to put up a new fib. So we have from point A to point B down to the 50% again. And look, we are working our way up to that negative 27% up here. So this would be the next target for the beginning of the week. Now, because it's Saturday, the market already closed, so the market's not moving. We might get a pullback down here. As long as we don't break these lows, we're still going to be looking for the continuation to this level, the negative 27. So we're not in a trade now, right? We could, if we start to get a pullback down, we could set up another fib from this level. It'll be like a short-term fib. We'll set up another fib from this level. This is just an example. To this level. Come back down maybe to the 61.8, and we'll take our trades right up there. All right, we'll do another example from like a bearish structure, right? We had an example here for a bearish structure, but since this is an uptrend, this is a bullish market, right? We're gonna find another example for bearish structure. All right, this is a good one right here. We had the market come up, point A, point B, point C. So we have our impulse move, then we have our correction, and then continuation. Look how it hit 61.8 on the wick. This is why it's J wick trading. Okay, we're gonna get these wick entries. We're gonna continue to make these. When you have a wick entry, it's more of an aggressive of an entry, but you're getting a way better risk to reward. So this is how we're able to build these, do these account builds. So this is just an example. Boom, 61.8. Let's just say we put our stop loss at the next fib level, right? To the negative 27. It's a 5-to-1. That's a 5-to-1 R&R. So if you're risking $1,000 to make $5,000, this is how we're able to kill the market. Let's do another fib. Let's do from this level here to here. See, we barely hit the 38.2. So this is still basically continuing. We don't have enough pullback to really get a good entry. You're taking a higher risk because then you're looking at these highs right before market structure breaks. You're looking at these highs. So the market could do something like this, right? It could come down, come up, come down, come up, come down, come up, come down. If we don't get an actual pullback, maybe to these levels here, it's definitely a higher risk. But you see how the market was so bearish. But let's dissect it a little better. Why was it so? Remember the rubber band analogy I just used earlier? Look at this huge impulse move up. We had no correction yet. We came back down to these levels to retest. Look, perfectly before we started to actually get a pullback. So yeah, I just want to go over a quick video. We'll get more depth in Fibonacci. You'll see me using Fibonacci a lot more. I use Fibonacci, market structure, and support and resistance. This is usually like my main things I'm looking for when I'm trading. Obviously, price action, Fibonacci retracements, support, resistance, and certain key levels is what we're looking for.